In this video, we're going to showcase a TradingView indicator that can help you identify bullish and bearish energy in the market. This tool can help traders adjust their trading strategies to better align with prevailing market conditions. It integrates price action and volume, which makes it a really compelling tool for price action traders. If you find value in this video, remember to leave a like. Now, the indicator that we're talking about is called Accelerated Directional Energy Ratio, or VADER for short. To add this indicator to your chart, you're gonna go to TradingView. Then open any time frame of any trading security that you like. Then on the indicator search tab, type in Volume Accelerated Directional Energy. Select this one by RedKTrader. The Volume Accelerated Directional Energy Ratio, commonly referred to as VADER, is a technical analysis tool designed to provide traders with insights into market dynamics. This indicator combines both price action and volume to decipher market movements. The premise of this tool is that it examines large price moves associated with significant volume as indications of strong buying or selling energy in the market, indicating that buyers or sellers are in control of the market. Now, let's go over this indicator's components. This blue line with crosses represents positive energy, or the buying strength in the market. This orange line with circles indicates negative energy, or the selling strength in the market. This thick green and red line represents the net energy, and crosses above or below the zero line are the main signals to watch for indicating a shift in market control between buyers and sellers. When it crosses above the zero line, that indicates that the buyers are in control of the market. Conversely, whenever it crosses below the zero line, that indicates that the sellers are in control of the market. Now, looking at this indicator, we can see that whenever the blue line crosses above the yellow line, this red line usually changes color to green and also closes above the zero line. Conversely, whenever this yellow line crosses above the blue line, this green line usually turns to red and also goes below the zero line. This basically means that they both have the same function. Now, there are several ways that we can use this indicator to trade. The first method is like this. Whenever this blue line crosses above the yellow line, that indicates an increase in buying strength in the market and is also an indication for us to enter a long position. On the other hand, when the orange line goes above the green line, that indicates an increase in selling pressure in the market and is also an indication for us to enter a short position. We can also use this indicator to identify market divergences. A divergence occurs whenever the highs and lows of this indicator are doing the opposite of what the price action is doing. For example, here we have a bullish divergence, and we know that because, as you can see here, this indicator created a higher low right here. And looking at the price action, it was creating lower lows. Because of this, we enter a long trade. Now, this is a bearish divergence. This indicator created a lower high right here, and then looking at the price, it was actually creating higher highs. Because of that, we enter a short position. Now, an overall interpretation of this indicator is like this. Whenever this background plot is colored green, like here, this is an indication that the bullish energy in the market is higher than the selling energy. Whenever this happens, the price will most likely continue going upwards, which means it's time to consider only entering long positions. On the other hand, whenever the background plot is colored red, like it is right here, this is an indication that the selling energy in the market is higher than the buying energy. Whenever this happens, the price will continue to go downwards and is an indication for us to enter only short positions. This indicator should always be used as a secondary indicator in conjunction with other technical analysis tools, because just like any other technical indicator, this one produces lots of false signals, especially when the market is ranging. So because of that, we're going to add a trend filtering indicator and see how we can use it in conjunction with this tool. But before that, let's talk about hankotrade. Now, you may be thinking, and what exactly is hankotrade? hankotrade is one of the most reliable forex brokers out there, and for that reason, I use them every single day. As you can see here, this is my trading history. I mainly trade gold, and up here you can see that this is actually a live account. The reason why I love hankotrade so much is because of their extremely low commissions and spreads. On Forex, for example, the spreads can go as low as 0.0 pips, which is actually the lowest they can go. For those of you who love high leverage, hankotrade offers a maximum leverage of 1 to 500. If all of that isn't enough, they're also going to give you a 100% bonus for all your deposits up to $25,000. So if you deposit, say, $500, they're going to give you a bonus of $500. So now you'll have a total of $1,000 to trade with. To access the bonus, as well as all the other perks, sign up to hankotrade using the link in the video description. Now, back to the video. Now, let's add one trend filter indicator to the chart. Let's go with one called Market Bias. This one designed by Professor X. Open the Style tab of the settings and disable the Heiken-Ashi option, and then click OK. The way this indicator works is like this. Whenever it's colored green, like here, that indicates a bullish trend. A dark green color, like this, indicates a pullback within that bullish trend. And of course, it's going to be the opposite for a bearish trend. Red indicates a bearish trend. Dark red indicates a pullback within that bearish trend. An example of a strategy with this tool is basically combining price action with these two technical indicators. One price action concept that we can use is the simplest one, which is support and resistance. So right here, we can see a very clear resistance level that was touched twice, here and here. Price then broke and closed above it and did a retest of that level. So this break and retest of a previous resistance level is a strong indication that the price might continue going upwards after the retest. Our second confluence is the fact that the trend ribbon of the market bias is colored green, indicating that the market is currently in a bullish trend. This dark green color indicates that the market is also in a pullback. And of course, to use this indicator for final confirmation, we basically want to wait for this blue line to cross above the yellow line. This indicates that the buying strength in the market is now higher than the selling strength. As you can see, the crossover just happened and this bottom line also crossed above the zero line and then changed its color to blue. This indicates that the bullish energy in the market is now increasing, so we enter a long position. Now, here's a short example. So we first of all want a price action confluence. So here, there is this clear level of support. Price broke and then did a retest of this support level. During the retest, the price was in a bearish trend, and we know that because this trend ribbon of the market bias was colored red. The market was also in a pullback. We know that because the trend ribbon changed color from red to dark red. Now, during the pullback, we want a confirmation that the price will continue to go downwards. That is gonna come from this indicator. We're gonna wait for this orange line to cross above the blue line. Now, this crossover indicates that the selling energy in the market is now higher than the bullish energy, and is an indication that the price might continue to go down. We also see that this green line changed color to orange and crossed below the zero line. With all these conditions met, we enter a short position. Now, as you can see, this simple strategy that we've just crafted combines both price action confluence and technical indicators. With such a strategy, or any other strategy, you will be able to take full advantage of the VADER indicator. Go ahead and take a look at it and see what other trading strategies you can come up with. That's been it for this video. I hope you found some value. If you did, hit the like button below and consider subscribing to stay tuned. Thanks for watching. See you next time.